We've seen quite a tremendous rally in this market. We're up almost 6% over the course of 2 days. And as we know, in bear markets, we see some of the most vicious rallies, and they happen to be bear market rallies. Are we in for one of those again today? I think so. I think the groundwork is perfectly laid for new lows. Let's not forget, we were just at new lows last week. However, we were also at lows in oil. Oil was at the lowest levels all year since the very beginning of January 2022. Let's not forget we had the Putin price hike, etc., these massive runs. However, guess what? Oil's had a bigger rally the last 2 days than the stock market overall, up 8.8%. Sorry, my phone, I guess some setting isn't perfectly prepared yet. Anyways, 8.8% in oil. For some reason, the market is not focusing on this. I don't know why, but here's why it matters. What's caused this market to pull back? It's been the Fed. What has the Fed been concerned about? Inflation. The market is rallying here because they expect, inflation has peaked. The Fed might be showing signs of pivot. Today we heard Fed speakers speak. I didn't hear any signs of pivot. As a matter of fact, I heard quite the opposite. I heard the Fed saying, unemployment might not get to 6.5%, but it might get to 4.5%. Everyone's thinking the Fed might cave to some pressure from the UN or some pressure from the politicians and will go back to being a blank check organization that just prints money. They made a mistake when they did that, and they're no longer doing that. They're saying they're comfortable seeing unemployment go up nearly 1 full percentage point. That's a lot. That's a lot of jobs. It's a lot of death. There's death associated with rises in unemployment, and they're comfortable with that. So to think the Fed is just going to cave and pivot to some political pressure, well, that runs contrary to the whole point of having a Federal Reserve, doesn't it? So this whole market, the whole footing of this 6% rally that we've seen, which is the strongest rally we've had, strongest 2-day rally we've had since November of 2020, that's quite a long time, I believe is incorrect. In addition to not being correct. And that's just on the basis of the Fed. In addition to that, to just being incorrect on the interpretation of what the Fed itself is saying, we are now seeing oil prices make yet another run. We had that move last week to new year-to-date lows with oil prices roughly 9% lower than they are today. And we haven't even got the OPEC meeting. That happens tomorrow. We also heard today Biden isn't going to do any more SPR releases. They're not considering that for obvious reasons. They can't do any more SPR releases. They've depleted it quite significantly. Roughly half of the SPR has been depleted. That needs to be refilled. People have priced oil down over the last several months on recession fears. Paper traders have been in the market, shorting the market, messing with liquidity. Yes, oil consumption does come down when there's a recession, but not very much. People still got to drive. People still got to transport goods. There's still stuff going on ships. It's not like auto sales where people can just fix their used car. They don't need to upgrade to a new car. People still need oil. Everyone still needs oil. The economy overall is still a living, breathing organism that consumes oil as a lifeline. So yes, I will grant you there's some contraction, but the average decline in oil is 30 to 40% during a recession. We have brought that all in. The difference between now and previous recessionary periods and previous pre-recessionary booms is in the previous pre-recessionary boom, we did not experience much drill, baby, drill, high prices, let's get this thing going. We experienced lots of capital constraint. And right now, we're seeing tremendous desire to cut production. And it takes just a small change in production to affect the price dramatically. And you can rest assured that if OPEC cuts by 2 million barrels tomorrow, that's going to be greater than any sort of recessionary force we feel. So that alone should lead to price increases. Then you take off the SPR release, and you've got a perfect storm for a continued rise in the price of oil. You've got the Fed not signaling that they're content with the inflationary picture and that they're not going to pivot and that they're comfortable with inflation or with unemployment going up. And you've got a perfect storm for a continued hawkish Fed and continued inflation in the face of a market that wants to rally its strongest in years. We're almost 2 years since we've had a rally this strong. You just don't have a good picture. You've got negative fundamentals and positive technical market action that is very short term, won't last. It will get whammed by the fundamentals. Rest assured that's going to happen. It always does. It's continued to happen all this year, every single time. And I'm fading the rally. If it gets tremendously strong and we get to a very high level, I will go short again into Fed speak. The Fed will come. It will hammer things down. Let's keep our eyes on the price of oil. Let's watch OPEC tomorrow, see what they do. But, I mean, the fundamentals are there. And it seems to me people want to get bullish this market. I understand. I completely understand. Prices are down. They're down tremendously. But the prices based on previous earnings, very strong economics, stimulus money, inflationary earnings. We now have higher interest rates, so it's much more difficult for people to borrow money. There's less money for them to have. Credit cards are harder to spend. Credit card balances are up tremendously, meaning people are almost maxed out. That is going to lead to falling earnings, which means the actual cash flows from the businesses you get are going to decline, which means the earnings decline, which means the PEs go up, which means they have to revert to historical norms, which means the P's have to go down and the ratio has to come back down to historical norms, and stocks just fall. So this is a more week-to-week, month-to-month outlook. I have no idea what's going to happen tomorrow. I have no idea what's going to happen on Thursday. I have no idea what's going to happen on Friday. We'll see what happens. I'm not buying. I'm not getting bullish. I've got my thoughts. I've shared them here with you. We'll see what happens. And if extremes happen, we will fade them and we will bet against them. And we'll see what happens. So until next time, peace out.